And look at how the markets are reacting to the killing of Qasem Soleimani. And the markets really are such an important barometer, aren't they, for news like this that impacts Iran and Iraq?
Certainly, and as you and Ubay were speaking a few moments earlier, this has been broiling for a while, but really the markets seem to have been blindsided by it, and really they're tumbling. More on that in a moment.
Thank you so much, Mubin.
The markets were off to a strong start on the first day of trade in the new year, but now investors are rolling back their stakes over fears of a full-blown conflict between the US and Iran. Tehran's threatening to retaliate after US forces killed one of its top generals in an airstrike in Baghdad. Analysts say any escalation could pose a threat to global oil supplies. Now that's driven oil prices more than 4% higher to levels last seen when Saudi Aramco's oil processing facilities came under attack back in September. Asian markets have been bullish over the upcoming US-China trade deal and the Chinese central bank's decision to pump more than $110 billion into the economy next week, but investors cashed out on Friday, opting to sit out the weekend as the war drums beat in Washington and Tehran. European markets are also down, as analysts say global oil prices could be headed for a sharp rally that could drive business costs up across the continent. Over in the US, tech stocks rallied overnight, with Apple shares rising above $300 for the first time ever, but pre-market trade today is pointing to a sharp drop across the board as tensions with Iran escalate. Industrial stocks could be hit by weaker data from the construction and car sales that is due out later today. Now, for more on this, Babak Emamian joins me from London. He's a member of the British-Iranian Business Association. Good to have you with us, Babak. First, could you break down the impact of these developments on markets for us?
Well, it's mainly we are talking about the oil market. So the issue is whether there will be a disruption to the supply side. And the supply side would be the disruption from the Iraqi oil, 3.5 million Iraqi oil. That's the first question, because right now, Iranian oil is irrelevant to the world economy because they are selling at 200,000 barrels per day. So the Iranian oil export is irrelevant. So the only issue is that 3.5 million Iraqi oil exports, whether that will be disrupted. Now, it is not good for the Iranians to cause any disruption, because right now Iran makes its money from Iraqi oil exports, because by having Iraqis lots of money, the Iranian goods is sold to them, and Iran is now benefiting something like $15 billion a year to $20 billion a year from supplying goods, white goods. These are like refrigerators and house items to the Iraqis. So the Iranian will not try to disrupt the Iraqi oil export, but they may disrupt the Saudi oil export.
Precisely. Now, as I just mentioned a few moments ago, the last time we saw oil prices moving like this was when those Saudi oil facilities were hit back in September. Tell me, how realistic are fears that something of a similar nature might happen again? How would that impact markets?
Well, the possibility is there, but I think once bitten, the Saudis have upped their defenses, or one would hope that they have done that. And we've now learned that there is so much that the Iranian can cause damages to the oil export for Saudis, or disrupt oil supplies through the Strait of Hormoz. Because at the end of the day, the biggest losers would be the Southeast Asia economies and Chinese economy. And Iran needs the support of the Chinese economy. So they will not try to disrupt oil supplies through the Strait of Hormuz. They may try to attack the oil installations in Saudis just to show some sort of retaliation, but that will not cause a lot of damages. I don't believe it will cause a lot of damage to the oil export, Saudi's oil export. But in terms of dollar terms, we are looking maybe $5 going on the oil prices. So right now it's between 65, 69, maybe it would go to $75. But $100 oil per barrel, I don't think so.
Well, even at those levels that you mentioned, we've seen oil prices really haven't gotten any impetus from the demand side. It's all been through supply cuts. If oil prices rise to those levels that you've just mentioned, around $65, $70 or $75 a barrel, how much of an impact do you expect that to have on these Southeast Asian economies and really on other economies as well?
Well, the Chinese have started a stimulus. So they've said this year they will have a stimulus. ECB, European Central Bank, also are talking about another stimulus. And the US economy is on constant stimulus. So I think 2020, we will have a surprise rise in demand. So you are right on that side of it. There will be a surprise rise. But the supply side of it also, you know, there are Norway's coming in, other African countries are coming in on the supply side. And there is that tightness that people talk about supply and demand. They said that a year ago about if you take the 3 million barrel per day of Iranian out of the oil world supply side of it, there will be, you know, oil prices going up, and we saw that didn't affect it. So right now, it seems that there is that hidden like 4 to 5 million barrel of supply side that the world can afford, and it won't have an impact on the oil prices as such.
Babak Emamian there from the British Iranian Business Association.